T minus 2 minutes. T minus 1 minute. T minus 50 seconds. T minus 40 seconds. T minus 30 seconds. T minus 20 seconds. Ten, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Hey everyone, how's it going? Just wanted to do a little bit of a stream today. I've been doing this over the past couple of weeks, trying to fit in kind of like a stream every week to see if you guys like this a little bit more. Is kind of like, I personally consider this kind of more of like an interactive video type of format. Is kind of like the intention on my part. So I'd love to know what your guys' thoughts are. Obviously, happy to answer any questions, anything like that. But going over today, I want to talk specifically about yet another crash that we're seeing going on within the market. So I want to discuss that in a little bit more detail, kind of go into that, talk about kind of my thoughts on this, what I'm expecting to see kind of in the short, medium, long term, a lot of that type of stuff. And then going on from there, we can, answer some questions, talk about whatever you guys want to talk about. But overall, I'm hoping that this will be kind of more of a fun type of interactive video type of situation. So with that said, I'm going to go ahead. I'll get started out kind of talking about what my thoughts on the market, all of the things that are happening right now. And then we'll go into, kind of some more of the like questions and answers and all that type of stuff. So let's start out with the crypto bubbles, and we will take a quick look at kind of what we're seeing. Obviously, not a great day in the market. It's funny because, well, maybe not funny, but it's just interesting that, we see a couple of days where, we start to print some minorly green candles, and then we just go back to the majorly red candles. It just seems to be how things have been kind of going recently, which is obviously not ideal, but that's just part of the game. If we look at the weekly, we are still green on the week. Some of these actually doing quite well, so, things been all right for this week, but obviously, some of that bullish momentum definitely taken out here, as we're seeing some pretty big pullbacks kind of all through. We can see Bitcoin right here down about 3.3%, which is pretty sizable when we are counting the fact that this is like over $1 trillion asset. So, obviously that's not great. We can see, a couple of different things. Walrus, I think this was a TGE that happened today. So, I mean, it's been a pretty big sell-off. Not the best day to have a TGE, if you ask me, but still in the top 100. So, obviously fairly nice there. Ethereum down 5%, Polygon 8%. I think Polygon's down horrendous on the year. Definitely has not done well at all. It's pretty much been down only. I mean, we saw a little bit of that run up when kind of everything else did. Not been the best year though. Let's see if we can find Solana. Oh, yeah, here's Solana. Solana down 6.5% today. Solana has been one that is really had a rough go of things, and so that's another one. Obviously, hopefully that kind of starts to turn around. I think this is being hidden by my camera or my picture. If you can see here, Tau also down. I mean, a lot of normally pretty decent coins down a decent chunk. Obviously, ICP not doing particularly well here either, down to about 563. We did actually get back over $6 here within the last week or so. So that was good. But obviously, basically all of that momentum is gone. Well, unfortunately, but it is what it is. That's kind of what we're seeing kind of market wide everywhere. So not necessarily the end of the world. Let's actually go ahead and we'll just take a quick look at the Bitcoin chart. And then I actually we'll go into the coin glass and we'll just kind of take an overall look at the market, what we're seeing there. We can see here we're looking daily. If we look, I actually, I've been doing a little bit of trading on this account. So you can see I actually have a position open from way back. I was actually back up in here where it looked like we might have been finding some support on this level, and then obviously we broke out of it. So it was a low leverage trade though, so I'm not really particularly worried about it. But as we can see, we have broken down. We did seem to, kind of find our bottoms. Hopefully, found our bottoms here. But then, obviously, it looked like we were starting to get some bullish momentum, and then obviously, some of that has been taken away. If we were to draw a trend line, this is kind of the trend line that we were seeing. I would say something like that. Maybe it was more something like that. It's pretty clear, that we've broken that at this point. Again, we could see a really strong wick up. We don't know for sure. But it does look that we have kind of broken down from this trend line. You can also see we had another trend line coming here. This trend line, once again, proving stronger than the trend line to the upside. I did actually make a video about this. I also think I may have made an X post about this as well, talking about exactly what was going on here, as we were kind of coming into a pinch point where both of these things could not remain true, right? And so, one of the things I was talking about was, well, which one of these will be the one that wins out? I was kind of leaning toward this longer trend line just because it's got more historical precedent and more volume essentially backing it. But then also we have been in more of a bearish market for crypto generally. So, but we were at the start of an up run. We were at like an ascending channel. We could see, a little bit of bullish momentum coming. But of course, at least so far, it does look like that has been broken, unless we see some really crazy wick and then some candles to follow. We do have a wick kind of below here. So unless we see a wick, probably going to be kind of sending along this descending trend line. To how low? Who knows? Really, really hard to say. I think there's a couple of different places we could be looking. There's obviously kind of this local bottom that we found here, kind of giving a little bit of resistance back at this point. But to kind of see anything further, we're gonna have to go kind of in the Wayback Machine. And the first thing that we'd be seeing is probably kind of somewhere along here. These were kind of the highs that we saw before we fell into this like 8-month long descending channel. And then also this was the high that we also found before we got rejected and then eventually kind of broke back out. So this is kind of going to be, in my opinion, probably one of the major supports that we'll find. We do have this support here in the sense that it was, kind of the most recent one. So if we do start to look at kind of this descending trend line, we are coming up on potentially seeing these things happen. So we can see here about 76.6 and about 73.750 would kind of be the next two major lines of support. We would get to the very absolute maximum into this right about the last day of April or close to the last day of April. And then we get to the bottom of this trend line, probably somewhere around the 7th, 8th of May. So, definitely can't have both of these things remain true forever as well. So, we will eventually get to a point where we have to either break through this support or we have to break through this descending trend line. Again, the end of April is kind of the key decision point for that. And then we also have the same type of conversation here, and this is going to be about early part of May. So lots of crazy decisions coming. So we'll have to see. And then if we kind of drop past that, you can see there's a lot of various different points of support. Actually, I'm not even going to use a line. I'm going to use a rectangle, because really what I would call this is various zones, right? I mean, even probably like in this range, you've got some zones. Even if you look in like probably this range, you've got some more zones. So, I mean, these are all going to be like probably pretty high. That's even kind of a large one, but like maybe something like that. I mean, that's kind of a high liquidity zone. That's kind of a high liquidity zone. We've got a lot of liquidity zones going on here. Probably another one, probably somewhere in this range. Again, you can see these are very, very wide spreads. I mean, this is like from 60 to 64. They're not supposed to be tight ranges, right? And that's kind of why I didn't want to make one particular support or resistance here, just because there's so many different places that they could be, right? And so if you look at kind of major support line here, probably something here, but again, this is even more of a zone. This is probably kind of like one of the major support lines. And then we can obviously see down here, we had multiple different times where we were kind of bouncing around this like $53,000, $54,000 range. So that's kind of what we're looking at. If we do kind of break through these two major supports and run to the downside, that's kind of what we're looking at overall. Now, moving along, I'm going to do a quick switcheroo, and I'm going to load up the coin glass, and we can go over kind of some of the market updates there. We are actually sitting, just from what it looks like, it's a neutral. I'm actually going to show you the market dashboard that I've made. And this is something that you can actually, or at least you should be able to go check out yourself if you're interested. You can see here. So this is just a market overview dashboard that I made. These are kind of like the 4 most important things, like at a glance, that you could kind of take a look at. So if you look here up at the link, it's just pro dashboard Kate O'Neill dash market overview. That's kind of like my special link that gets you to this. So if you are interested, you can feel free to check it out. You can bookmark it, do all that type of stuff. This is not proprietary technology or anything like that. So if you are interested, you can feel free to kind of check that link, and it'll basically just take you here. So what we can see here, though, is we've got a kind of a various combination of things. So we've got the open interest and volume. This is for Bitcoin specifically. They do have a chart that does the whole market. I really wish they would add it into the dashboards, because to me, that's a little bit more valuable than just Bitcoin specifically. But I mean, Bitcoin dominance is like 55-ish%, somewhere around there. It's over half of the market. So, I feel like if we're going to pick one crypto to watch, this is going to be the big one. We can see volume kind of coming down a little bit. It's staying somewhat stable here, but it is coming down a little bit. We can also see as prices rebounded, open interest has. Obviously, very recently, prices kind of come back a little bit. So I would expect that we see open interest accordingly fall a little bit. A lot of what we're seeing right now is, we're trying to decide, where do we go, right? Is this kind of like the retrace before the move back to the upside, or was this kind of the distribution period, and now we're kind of on the downside to where we find another accumulation period? Either are completely possible, and we don't really know yet. I mean, that's kind of one of the things, people have been asking me about in like my Discord channel and all that type of stuff. It's like, well, what's next? I don't know. I don't know what's next. I mean, there's a lot of things going on from a macro perspective that don't look particularly good in the short term. But then you also have a lot of things from like a regulatory perspective and an adoption perspective, and just an overall general shift in kind of the tone of the market that I think is very, very bullish in the longer term. So you kind of have these like 2 major things kind of fighting against each other, and we just have to see kind of which one wins out. I think it is entirely possible that we see kind of the bearish sentiment win out in the short-ish to medium-ish term, or medium-ish term. And then in the long term, I think it's very, very clear that crypto is only going to continue to go up. Again, I could be wrong, but that is very much my opinion there. If we look at the RSI heat map on the 24-hour, we can see things are starting to come back down. The majority of things coming back into neutral or even weak. We can see the market averages on the very low end of neutral. And then we also can see with the Bitcoin exchange liquidation map, definitely with that move to the downside, there's a lot of leverage piling up to the upside, which would mean liquidating shorts. If we look at the 7-day, we can probably see something very similar, which we can, more leverage to be found to the upside, liquidating shorts. Kind of the biggest wall seems to be here between this like 89 and like 87,000 range. There's a lot of shorts piling up here, probably because they think that this is going to be such a harsh level of resistance to get past that. I don't think people are expecting that to really happen. Now, what we can see here is also on the crypto fear and greed index, we are on the low end of neutral. It would not at all surprise me if we do fall into fear potentially over the weekend. Usually the weekends are kind of generally a little bit more bearish, or not bearish, but like they're just bad for price action than during the week, especially now that we have some of these ETFs and whatnot. You kind of have one of these like built-in buyers or sellers that's kind of not active on the weekend. So a lot of the institutional stuff obviously is not going to be very active. And so some of that price action is just a little bit weaker. So like I said, it would not surprise me if we pull back into fear. If we look at the last week, we can actually see 4 days in neutral, 3 days in fear. I do think this makes sense given kind of some of the short-term resurgence we've seen in the market. Mainly it's because it just hasn't been perma bleeding. So, that's been good to see, but it would not surprise me if we fall back into fear. If we look at the last month, we can see actually 17 days in fear and 6 days in extreme fear. So we can see, what is this, like 76, almost 77% of the time we have been in the fear or extreme fear within the last month. And if we go back to the last year, kind of a good spread here, actually primarily in greed. We did have a kind of a decent bit of time over the past year when we've been in greed. Think about kind of like that March to April-ish time frame, and then think kind of like December to like November to like January, early January-ish time frame. Basically all of that was in greed. Also about a little bit of extreme greed there too. So we have come out of a primarily greed-driven market. Now we've kind of moved back into fear. We'll have to see what's next, right? I mean, kind of going back to what we've seen on the Bitcoin chart, obviously not a whole lot to be super excited about price action wise, but we just have to remember that, this all is short term. If we do go back, I'll give you guys some perspective. We did see this kind of running into 2024. We saw a really strong run from about January to about March, kind of late January to mid-March. And then from there, we basically saw our top on the 13th of March, and we did not come out of this channel. You can see it's a descending channel. Let me actually find the thing that I like to use. There's this like special retrace thing that it does. It's kind of cool. Well, maybe I'll have to find it later. But basically there's this cool thing where it'll go, might be fib. No, I don't think it's fib channel. Anyway, what it is, it's a channel where you can kind of draw this in, and you can basically see it like it follows this channel. I'll just use two parallel-ish lines, but you can see it kind of follows kind of like that, and then it kind of follows like, regression trend. Hey, here we go. So basically from like here to here, probably when it broke, you can see it. I mean, it basically almost perfectly fits within this regression trend. Obviously, we see a couple of wicks lower to the downside here, but it almost perfectly fits within this channel. And this was a span of like, March 13th to like October 14th. So what is that, like 6 or 7 months? A decent bit of time where we've seen basically nothing happen. And then, of course, we saw another really strong move to the upside. We were starting to see something similar happen here where it looked like it might have been a little bit of kind of like that consolidation, accumulation, distribution period. We don't know which is which, but then we have seen that breakdown. So with this breakdown, hard to say exactly what's going to happen. We might see a retrace back to this level. We've already seen it once. Or actually, I guess back to this level, because this would have been the previous highs. We didn't actually quite get there when we got to this point. So we could maybe see a retrace to this level and then a bounce and a little bit of a further push up. We'll have to see for sure. Really, really hard to say. But overall, that's kind of how things are looking like for the Bitcoin chart. So let's see. Looks like we got a comment coming in. Just wondering how far we could go down, moving closer to April 2nd tariffs. So I'll give you my opinion. Again, this is just my opinion. You obviously you need to do your own research. There might be other people out there in the world who have a different opinion than me. But my opinion, at least as it stands for right now, is I think that when tariffs actually come into place, nothing's really going to happen, because you have to remember that the market is all about finding an edge, right? And so the market at any and every point in time are going to be trying to act upon as much information as they can possibly get their hands on, credible, not credible, speculative, completely unrealistic, super real, like all of it doesn't matter, right? Like they're trying to get their hands on as much usable information as possible and then act on that. So with things like tariffs, the market has essentially already taken a gauge on what they think is actually going to happen with tariffs. What's that going to do to inflation? What's that going to do to like the overall like global macroeconomic economy? What's that going to do with various debt crises happening all throughout the world? What's that going to do with unemployment? People are already taking all this stuff into account, and then they're saying, okay, based on X price, we're either a buy or a sell. Obviously, we can see recently, particularly in crypto, a lot more people have been sells than buys, which is why we are seeing price go down. Now, this can change though, right? I mean, if something happens, this is what you would usually call like a black swan event on like a negative side. But if there's something that happens where people don't actually expect it to happen, right? So let's say COVID's a perfect example. The reason we saw kind of like the COVID crash is because there was something that happened that nobody really reasonably could have foreseen that just kind of blew up everybody's strategies. And so when that happened, obviously, people had to sell. And then when people were like, oh my gosh, it's actually not going to be that bad. And then we're going to be like, oh, buy. And then we kind of saw that like really deep drop and that really deep kind of recovery back to the upside. And so in my opinion, I don't think the act of tariffs actually coming into place is really going to do anything too special in the market unless something follows along with them that is not expected, right? Or like unpredictable in a various sense. So that's kind of my expectation there is I don't actually think that we're going to see anything too crazy happen when tariffs continue along. Now, if we see that, tariffs are going to get doubled or tariffs are going to, I don't know, like all these other things that like could potentially negatively or positively for that matter impact the stock market, all of this type of stuff is what's going to really matter when people are actually looking at, well, do I buy or do I sell, right? That's going to make a huge difference. So hopefully that kind of makes sense. I personally not particularly worried about the actual like mechanistic impact of tariffs coming into place because a lot of people I think are kind of expecting that to a certain degree and they're expecting a certain outcome. Now, if the certain outcome changes, let's just say that the expected outcome is inflation, right? Well, if the expected outcome is actually, well, inflation goes lower somehow, right? I mean, I think it's easy to say that the act of tariffs isn't deflationary, but like, let's say it's tariffs and then the income tax in the US gets cut to zero. That could maybe net be deflationary, but we don't know yet, right? And so that's what a lot of like people are trying to figure out. And this is why the market is so volatile right now. And this is not just crypto. This is stocks, this is bonds, this is everything. Things are really, really volatile because you have a whole bunch of things going on. Three things in particular. One, you've got tariffs. Tariffs are inflationary because it's essentially an artificial wall or an artificial barrier built up to essentially like make things cost more, right? And the reason why you would do that is because you have certain things that are deemed of like national security importance, right? For example, if you don't know how to make planes and you have to go to war and you need to make planes, that's a problem, right? So you might theoretically tariff planes coming from other countries because you don't want to get beat out on cost for making planes, essentially. So that's the first thing. Tariffs, generally inflationary almost all the time. But in addition to those, you also have one, which is the tax situation. We don't really know what's going to happen with taxes. Lowering taxes is kind of the only thing that's been thrown on the table. So if that were to happen, that's obviously deflationary because now you have this, again, artificial cost that's been imposed upon you for, I'm not going to say no real reason, but like it's been imposed on you arbitrarily because, government's got to pay for its stuff. And so that's why taxes exist, of course. But when that goes away, then that's something that is actually going to be beneficial, right? Because now more people have more money that they aren't. I mean, if you look at like people in the US versus people in like Dubai, for example, right? Dubai doesn't have income tax. If somebody in Dubai makes $1 million, they keep $1 million. If somebody in the US makes $1 million, they keep like 500 grand, depending on what state you're in, right? And so, I mean, that's obviously a massive difference. Somebody in the US and somebody in Dubai making the same amount, one has double of the other person, right? And so that obviously makes a massive difference. If those taxes all of a sudden go away, that's inflationary. Now, again, we can debate what tax levels, all that type of stuff. That's not what this is about. And then the third thing is government spending. So the other third piece that the administration is working on currently is dragging government spending down. Now, this is another point of major speculation is, well, how much can they bring it down? Because if they bring it down, let's just say, 30% or 50%, maybe that's really good, right? But if they can only bring it down 3% or 5%, but they're increasing, 20% tariffs, obviously, the numbers aren't going to be 1-to-1 like that. 3% on taxes and 5% on tariffs are going to be different numbers. But what that means essentially is like, that is also deflationary, right? Because if the government spending goes down, you're essentially saving more money. And that can either be in terms of like less taxes, or that can mean that people or like the debt gets paid down faster. And the US ultimately needs to print less money and do all of that type of stuff. So very, very important things to consider is that yes, tariffs are coming. Yes, tariffs are inflationary, but there's also those other things happening from a policy perspective. And then we didn't even talk about the Fed, right? I mean, obviously there's the Fed, got quantitative tightening, quantitative easing. I don't think people really understand what those things mean and why they're there. And then we also have rates. Quantitative tightening basically happens with like inflationary pressures. So that only happens when raising rates is not enough. Also, the reason why the Fed was raising rates and doing quantitative tightening is because inflation went really, really crazy. And they kind of did both rate cuts and quantitative easing at the same time, and a massive amount of quantitative easing, which is why that was so impactful. So that's kind of what we're seeing there. So when quantitative tightening stops, that does not mean that quantitative easing will start. Generally, how this would work is quantitative tightening will stop. They will now play with interest rates. If the economy is weaker, they will drop interest rates and drop interest rates and drop interest rates. And then if we get to a point where there's no more interest rates to drop, then quantitative easing starts again. So the quantitative easing, it's not like a binary, like you're this side or you're that side. Like there's a middle side where you just do neither of the two. So that is something that we also need to consider. Essentially, hopefully, those of you who are watching are understanding like this is incredibly complicated and there's so many different things going on that like even economics PhDs don't really understand what's happening, right? So when everybody in crypto is saying, oh, well, it's we're going to see this and then it's going to happen in April and then we're going to moon in May and, yeah, maybe, right? But like nobody actually knows because we've never really seen this level of like multiple kind of plates in the air, right? And so obviously, if best case happens, and yeah, things will go unbelievably well for us. But if things go poorly, then we realistically could be looking at 2027, 2028 to see another, shot at a crypto bull run. That is entirely possible. So you need to be prepared for that as well. Let's go back, take a look at a couple other questions. Ron, thanks, Kate, you subbed to your channel. Oh yeah. Thank you so much, Ron. I really appreciate it. I do my best. I really, I was actually talking to somebody about this the other day. It frustrates me because I've been watching YouTube, crypto YouTube specifically for like years and years and years. And the like over sensationalizing of everything is really frustrating. Like, I don't know how many of you guys are on crypto Twitter frequently, but that is like the absolute worst place where it's like you see one green candle, OMG, we're breaking new all-time highs in 2 weeks, sees one red candle the next day, OMG, it's all going to zero, crypto's over. It's like, give me a break, man. So it's like I try really hard to like not over sensation, just give people my opinion. I want to be straight up with the fact that, this is kind of why I think things are happening. But I can't even begin to tell you what's going to happen because nobody really can, honestly. I mean, aside from the fact that I can't predict the future, I also just, there's a lot of deeply complex micro, macro, transnational macroeconomic or like economic things going on that all of them impact each other in a different way or in various different ways. And so that to me is like a really, really key point, is it's not just, oh, cool, M2 goes up, crypto goes up. That's not how that works. Or, oh, QE's happening, so now crypto goes up. Like there's just so much more going on than that. I mean, yes, they can be correlated, but they're not always going to be like, oh, if this, then that. At least from my opinion, I just think there's so many more things going on, and it's a far more complicated topic than that. So let's see, Viking Oding, do you remember whether Trump put tariffs during his first presidency? If so, yeah. So that's a great question. He did. Many of them stayed in place over time. So I mean, the kind of the previous or the next following administration didn't even touch many of them. Obviously, he did not go nearly as ham as he did, or as he is doing in this next go around. But yeah, I mean, he put tariffs on a lot of different things on a lot of different people. And one of the things that's interesting to me is Trump has always been very, very pro inflation. Like he's literally been talking, or not inflation, excuse me, tariffs. Like he's literally been talking about this since the 80s. So the fact that like people are confused or surprised that like he wants to pursue tariffs and move to like a primarily tariffed economy is weird, because it's like he's been saying it for a long time. I don't know exactly what people are missing here. So that I do think is interesting. Hey Aziz, how's it going? Thank you for joining. Yeah, I just saw that come in. Looks like it's a bit old. Hopefully you're still around. But yeah, also please like the stream, push it to more people, all that type of good stuff. I'm usually really, really bad at remembering that. So if you guys would, I'm only 30 minutes in this time, so that's good. But if you guys would like the stream, all that type of good stuff, it does push it out to more people, all that type of fun stuff. But anyway, so going back to, kind of the economic situation. I mean, Trump's been pro tariffs for like ever. So that to me is not particularly surprising. One other thing that I find interesting, especially is the reciprocal tariffs, right? That's what's essentially going in on April 2nd. And so it's like, if people don't want to be tariffed, then they just don't have to tariff the US, which I feel like is, frankly, from like a pragmatic business perspective, I don't know why this has not always been the case. To me, I don't know why you wouldn't just do that, because if they want to make your product weaker at home, but you're not going to make their product weaker at home for you, that seems a little bit imbalanced. So anyway, that's kind of obviously like my personal thoughts on it a little bit more, but to me, from like a pragmatic point of view, I think it seems to make sense. Yes, it may be inflationary, but I think we also need to consider the fact that like this is all just like a kind of a big game of chess, right? The thing that people I think very easily neglect is the fact that the US economy is not only the largest producing economy in the world, it's the largest consuming economy in the world, and it's not even close. Like the Chinese economy is like relatively close in terms of production, but like they're not even remotely close in terms of consumption. And so this is very important to note, because when you tariff somebody 20, 25, 30, 35%, whatever it's going to be. I mean, there are some people who are tariffing the US like 200% on like agricultural goods, for example. If we go and tariff their agricultural goods 250%, that will completely ruin their industry, because there's a lot of countries, namely China. I mean, this is less the case now than it was kind of in the past, but there's a lot of countries who make an extreme amount of money off of exporting to the US, right? And so if that becomes more expensive for them, yes, of course, it does become more expensive for the American consumer, but it also allows other people flexibility to fill that gap, right? And so that, I think, is where things could get very interesting, and why I think it's almost impossible to say what's going to happen for sure, because I just don't know. I mean, there's a wide range of outcomes that could kind of occur with this. So anyway, that's kind of my my take on what we're seeing so far in the kind of with the macroeconomic environment. I know a lot of people say macro this, M2 that, all this type of stuff. I get it. I just, given my finance background, I think I probably have a better understanding than most about how a lot of this works. But there's a lot of people who I just don't think really understand, other than macro is a cool buzzword and it sounds like stuff. So just make sure that like you're kind of searching around for multiple different like worldviews, especially with something like this. I won't say that like this is inherently controversial, but like there's a lot of different places where people can inject their own personal or political biases into their explanations of things. I mean, I'm sure you can probably get a general sense of what my various inclinations might be based on how I explain the topic. So I would say just make sure you're doing your own research as well. Like, just because I explain to you in 20 minutes my take on how these like whole macroeconomic events are unfolding does not mean that that is the truth, right? So I would say just make sure you're doing your own research, do your own diligence on a lot of this type of stuff. You might find that you agree with me. You might find that you disagree with me. One of the best ways to figure out is go see if you can find a contrasting point of view as to why tariffs are good or bad, or they're going to kill crypto, they're going to send crypto to the moon, all this type of stuff. It completely depends, and a lot of it is kind of your own take and your own impression there. So anyway, that's kind of a quick take on the market, particularly going into tariffs, things like that. Let's talk a little bit about some other various things from like a more of like a mechanical trading overview. Now that we've kind of talked about high level what's going on in the market, we'll probably wrap the stream up here in about 15 to 20 minutes if I had to guess. So if you have any questions or anything, feel free to ask them. But I just want to go kind of over a quick mechanical, like, we're all here to make money. It's crypto. I understand that. I'm here to make money. I get it. But I want to talk about mechanically what are some of the things that I'm looking at, and how can we kind of like, what are some good best practices? Again, in my opinion, this is not, financial advice, is not anything like that. This is just kind of what I am looking toward personally. And you obviously can make your own decisions. So the first thing I want to go back to is if we look at, let me just switch this over. Perfect. So if we look at the Bitcoin chart, there's a couple of obvious things that are happening. The first thing that you'll see is I'm actually looking at this on the daily. The reason why I look at this on the daily is because it gives you a general sense of when things are massively oversold or massively overbought. So for example, we can see right here, we saw both on the RSI as well as including the Bollinger Bands, we did become oversold. This is the point where I was buying very heavily, because if you look at when we see overbought versus oversold, it's usually in very, very beneficial points. Like basically this is like the Pico bottom or very close to. You can see we saw some here, and price did indeed continue to go lower. But if you look over the next several months, or even if you're like short-term swing trading, you can see bottom here, and then we see it doesn't actually get back to oversold, but it does make a pretty nice run. That's a pretty nice short-term swing trade. If you DCA on all the bottoms that you find here, so you would have been in at like probably 60K. You'd have been in here probably at like, I don't know, 57, 58-ish K roughly. You'd have been in here at, as low as potentially sub 50K. And then you wait, and you just wait till you see, again, all of these types of things are at all of these points, we are outside of the Bollinger Band and oversold on the RSI. So you can see that like here, yes, we were outside of the Bollinger Band, but we're not outside the RSI. So maybe not the best time to be buying. Then we go here and we can see the exact opposite. We're overbought and we're also outside of the Bollinger Band. Oh, here price is at 93K. Here, not outside the Bollinger Band, not overbought. This would have been a great place to sell because, and again, obviously we saw it run higher, and we actually at this point may have even barely ticked into overbought when we started to see kind of pushing outside of these Bollinger Bands. You would have been getting in, what do we say, at our averages between, 50 to 60, and you were getting out anywhere between, like 93. Yeah, like 93-ish, 91 to 93. And you were up to like, 105 to 107. So this is why I kind of take a look at this at a very long-term perspective, because it gives you a good sense of where is the market heading directionally. Now, we also can see some of these major trends and some of these major patterns that are forming. So for example, if you were not around earlier on in the stream, you could see we actually drew out these lines, and you can see that this was a descending trend line that we've been following for now months, right? I mean, we could see we kind of got towards the end of it here. It looked like, maybe we could see, there's the Bollinger Band squeezing. Whenever they squeeze, there's going to be volatility. So there was the possibility in which we could have moved to the upside. I think that's probably when I took my trade. I was still kind of more generally bullish on the market, so I placed it long. Again, very, very low leverage because, again, if something like I knew that this was a possibility and I did not want to get liquidated. So that's why it's here. But you can see here, it's now moved to the downside. And if you look, we can kind of see following back to the upside, we saw this trend. But what do we see? We get towards this descending trend line, which again, still is in play. We see 1, 2, 3, 4, and now the fifth candle is when we break down. Very clear. I mean, I don't know how obvious it could be that this was a trend line that was massively impacting movement of Bitcoin price. Now, if we would have seen it break above and hold, that is the point, in my opinion, at which that's when you start to trade, right? Because we've broken the trend. We are now on an uptrend. Things are looking good. So if you're looking to kind of play on the long-term swing, like high-level macro type of trading for Bitcoin, you would have wanted to see this break before you would have taken a trade, because that would have confirmed that the trend has changed. Obviously, it is not. We are seeing a rejection. We are, at least so far, we have broken this trend line and likely are going to be continue bleeding further down until we are able to manage to break this trend line. And then at that point, kind of all bets are off. Then it, who knows, where we start to see. Probably be seeing some level of like kind of resistance at this range, probably another level of resistance in this range, another one probably in this range, and then we're kind of back to like the all-time highs. So that's kind of how things look from like a more of a mechanical view on trading. We've not seen trend change yet. We are still kind of bleeding down. One thing that I want to mention with this, and I generally kind of use BTCC and talk about BTCC, but I want to kind of highlight Phemex, because with this type of stuff, what have we seen over the past, basically since like the 22nd of November? We've seen a whole bunch of either sideways chop or descending chop, but it's chop nonetheless, right? We obviously saw this point in time, which is a fantastic time to trade, but we've seen a whole bunch of chop. And even if you look, I would say like probably 10 and a half of the past 12 months, it has been some level of chop. This was also descending, but kind of more lateral chop than what this is particularly. But this was obviously like more lateral chop. Why do I bring this up? Well, because Phemex, and there's some other options as well, but Phemex is one of the ones that I work with where they actually allow grid trading. Don't know why this disappeared, but they allow grid trading. And grid trading is really, really cool because it allows you to essentially trade the chop and make it more of a mechanical thing. Because obviously, a lot of people, they want to see, buy high or buy low, sell high, and you want to buy like the Pico bottom and sell the Pico top. And that's usually what wrecks most people, is the greed of trying to hit both of those points. Well, grid trading bots, let me just reload this and see if I can get the chart back. But grid trading bots are really interesting because they give you a bunch of that flexibility to kind of do your own thing here. So if you look at the futures grid, it gives you whoops, let's not do that. I guess, yeah, here's like kind of the FYI if you guys want to learn how it goes. You can see like this is a long trading bot. I would say at this point in the market, you either need to be doing a neutral, which is going to be essentially buying when it goes low and selling when it goes up, or you could do a short trading bot, which is every time it goes up, you open a short, and every time it goes down, you close a short. Up to you in terms of kind of which strategy you want to take specifically. But this is kind of how it works. And as you can see with this type of volatility, this can do very, very well for you. And you can even see some of these recommended ones doing very, very well. Again, these are 100x though. That's why the ROI is nice. You need to be incredibly careful with 100x because again, you can just do this without any sort of leverage. Look, let's just go back to 1x leverage. You're not playing with any leverage. You're literally just doing a grid bot and you're trading it that way. But essentially what you can do is you can say like, okay, we can see we've probably found a bottom here. Maybe we even want to like call a bottom down here at like 74K. So we'll say 74,000. is the lowest we want to go. And the highest we want to go, let's say it's like 98K. We realistically could probably even put it down to like this range, but let's just say 98K because reasons. So then we'll go 98K. And then how many grids do you want within that range? So let's just say 10 grids. Now you can see we've got price here, and now we've got kind of our buy and sell orders. So we've got, more buy orders as we go down. You can see there's 5 as we go down, and then there would be 5 as we go up, just depending on where price moves. Now, again, if we're going to go short, this is all going to be placing shorts rather than doing the neutral where you're kind of buying and selling. But that's kind of an interesting way that you can do that. And obviously you can, choose whatever investment you want. And then you've got advanced settings where you can do, profit reinvestment and take profits and stop losses and all this type of stuff for various trades. And then you can also AI back test it too, if that's something that you want to see, like how would this have done over the past several months? And then it'll give you a good idea. So if you are interested, I got the link in the description below for Phemex. I think the grid trading bot, especially in a market like this, is a really, really interesting idea. So if that's something you're interested in, go feel free, check it out. It's a very, I don't know, I love this type of stuff. I actually was paying for a grid trading bot subscription before I actually got into Phemex, because Phemex says like they do it for free. Why would I pay for a trading subscription when I could get it for free? So anyway, that's what I really, really like this type of feature. They also do have, again, actually, I'm not even going to talk about it just because I think it's a pretty risky time in the market to be doing something like this. But they do have a new feature that they released as well that's really nice for like low cap degen trading. Maybe we'll talk about it when the market's a little bit on surer footing. So anyway, just something to think about there if you are interested. I do think that grid trading is a really cool type of concept. So let's do that. We'll go back to, I don't know how we, let's see. Oh yeah, there we go. Now we just got rid of that. Let's see, Vikey, last question. Any thoughts when we call it over for now when it comes to a bull run? This is another really good question. I personally would probably say that point comes likely when we break and close below this kind of level of support here, because this is when we saw kind of that uptrend back in March of 2024. Sorry, let me rearrange my screen. It's probably a little bit hard to see here. If the chart wants to load, sorry, just give me 1 second. But there we go. Okay. So what we can see right now, and this is what a lot of people I think are kind of forgetting, is like, yes, price is going down, but we are higher than any point that we were prior to like November 5th, 2024. We're still higher than all of it. So we are ultimately in a really good position. Now, the point in which that starts to become a bit more precarious is when we start to break some of these highs that we saw when we got into this initial descending channel. That to me is where things become a little bit precarious, because now we're not able to actually say that. We started to break through some of this market support structure, because if you look at what we've seen over the past, 4 years, 3 years. Let me actually even get rid of, hopefully you guys don't need any of this, but I'm just deleting all of it so we can just get a pure and simple, clean view of what we're looking at in the market. So, and I just want to look at this from a very, very high level, big picture. Look at what we've seen in the market. This bottom here is basically the bottom that we saw back in 2022. And this was right after the FTX collapse. The FTX collapse happened. Everybody was like, it is over for crypto. Crypto is done. It's never coming back ever, period. Okay. Well, this is like the Pico bottom. Sounds right? I mean, that was about like capitulation time. However, if we look, we can see that basically ever since we've seen that point, and actually maybe let me switch over to trading view, because trading view will provide us like years and years and years of data. Let's just do this one. Okay. Oh yeah, I'll actually hide this bot or this trading strategy, but you'll be able to see, I think, pretty quickly what I'm getting at as we start to kind of take a longer term look at it and zoom out a bit. But what we'll be able to see here is exactly, we got more stuff I got to get rid of. Okay. Let's look at this. So now we can see all the way back to 2017. We will look, like I said, this is kind of where we were looking at on the other chart, is right here. So we'll go back. If we look at this prior market, you can see we see a high, or we see like a top. We kind of take a pretty aggressive dump, actually. But what you will see is it never really kind of closed below some of the highs before we got into this major run up. I guess you could kind of say since it broke below this kind of could have been an indication that the bull market was over. Obviously, it kind of traded down a little bit and then came right back up. Well, if we look here, though, we can see it breaks basically every structure. Like, it tries to find support here, and this was looking good, but it breaks every structural high that we see previously. We've seen none of that yet, right? I mean, the only thing we could maybe claim is that this was a structural high. Maybe we could claim that, right? And in which case, yes, obviously, as we're seeing, there is a little bit more bearish momentum in the market, but we haven't even broken below this previous high. So we really haven't actually seen anything particularly negative come into the market. Because if you look, ever since 2022, as I was getting at, we've never actually seen it like break a structural high, right? So like this is a structural high, this never gets below it. We get here, this is a structural high, it bounces off of it on multiple different occasions, right? Same thing. I mean, this was a structural high, but it never really kind of broke it too high. This was all just kind of range trading in this region. We see here, it breaks up. We hit a structural high here and we start to pull back. We never even come back to this level, right? I mean, you could even make the claim that this was a structural high. I would disagree, but you could make that claim and it doesn't even get back to there, right? And then it sends another run up. It comes back, tries to consolidate, doesn't even get close to these highs, continues to run. And then we see the same exact thing. We go into this descending channel. Again, we're looking to break this number. What do? No, we don't actually break it. I mean, we get close. We kind of get close to it, but we never actually dip below. And then again, we turn around and continue back to the upside. So in my opinion, from a pure market structure perspective, we can see exactly that. Let's just start lining out some of these. This is the line we would need to break. Here, this is the line we would have needed to break. Here, I mean, this is probably the line we would have needed to break, right? I mean, we haven't actually ever done that. It's only gone up. This is good news, right? I mean, so what we've seen here so far is we actually have not broken this line yet. So in my opinion, the point at which we would maybe start to get a little bit nervous about the direction of the market is if/when we broke this line. Because then at that point, we've kind of broken the market structure that we've been following for the past, 3 years at this point. That to me is significant. Until that happens, I'm really not particularly worried. So anyway, hopefully that is a good explanation, Vikey. Let's see. We'll ask more on Discord, don't I? Yeah, totally fine. That's why I have the Discord, obviously, is to push kind of more immediate interactions. I do only do these live streams once-ish a week. Sometimes I don't even do one a week. But yeah, that's why I have the Discord. So if any of you are interested in signing up for the Discord, feel free. That link is also in the description below if that's something that you're wanting to do. But yeah, totally happy to answer any more questions that you have. So, okay, cool. So that's kind of what we got on the Bitcoin chart. That's kind of how I'm thinking about when we enter a bear market. That's kind of how I view it. If we break this level, then that's the point at which I'd be thinking very, very hard about, okay, well, where does this stop, right? Because even if we look at like price, oops, wrong button. Nope, wrong button again. This is the one, price range. Because even if we, let's say, go back to this level, I mean, this is already a 50% pullback, right? That to me is like, that's kind of like, that's bear market. I mean, usually we've seen things like 70% plus out of Bitcoin, at which we would be getting back to kind of like this 30-ish thousand range. So, maybe, we kind of fall even further, but it's like, if we break this, that would be kind of my expectation, is that we probably see this level, maybe even come back and see this level. You can kind of see that if you gonna go look back. We saw this low. This low kind of got close to what we saw in 2019. Didn't actually quite get it, but it did get close. If we look, actually, it did go a little bit below. Okay, so it's the 2017 run. It got a little bit lower than that. So theoretically, we could potentially see that. And this would be kind of looking at this as the gauge. So, potentially we are looking to break below kind of the 68.5. Maybe we get back down into like kind of the mid 50s to 60s. I think that is entirely possible. But we can always see kind of, as it comes from the past, we get to points like we kind of bottom out. Here you can see we bottom out at like $3,200. We'd never even seen kind of above like $1,300 prior to that. So you can see, this was kind of the first run. This was the second. We stop out way above what we saw here. This time could be moderately different though, right? I mean, maybe we get to the point, because theoretically we wouldn't get below the $68,000. This cycle we did actually get below the previous high. So maybe like I said, we get into like the 50s to 60s. I do find it fairly hard to see, us getting back down into the 30s. It's possible, but I do, especially with institutional money coming in and kind of the more widely accepted just nature of Bitcoin, I find it pretty hard that we would actually get down to this point. This kind of 48, I do think could be a bottom, but even still maybe in this like kind of 50 to 60 range, totally possible. So anyway, that's kind of where I'm looking. We'll have to see, right? I think right now in the short term, obviously prices come down a decent chunk. Who knows how long that'll continue? But until we break this point, I'm not particularly worried. So anyway, let's continue along. If you guys have any questions, I kind of am mostly through a lot of what I want to talk about as it relates to the market. So if you guys have anything that you guys want to talk about, or questions, or just want to chat about random stuff, feel free to drop those in the comment section. Also, subscribe, do all that type of stuff. It does help push the stream out a little bit further, as well as you can stay tuned for more content. I talk about particular like specific coins. ICP is kind of the main one, but I also talk about Solana, Ethereum. I've got PiCoin has been one that I've been talking about a lot recently. Jasmy's one, XRP now and again, things like that. Try and keep up to speed with what a lot of what's going on within the market, particularly as it relates to specific coins, and then as well as just the market generally. As I've been kind of stating for the past several weeks, it does not really matter to me what altcoin you're in. They're all probably going to go down, and that's just because the market's going down. So you can kind of pick which ones you like the best. But for me, I'm basically limited to the big ones. I have a couple very small caps that I have left. I've basically taken profits on most of those, but I have a couple of small caps that I have left from just from some of the various stuff that I was doing, kind of back in this range. But we'll just kind of see. I'm not ready to call this market over yet. However, I've said this, I've made this very, very crystal clear. I am fully prepared for something like this to happen. Let me get my pen out and we can, is it this? I don't remember. I'm kind of bad at using this. Let me do this one. But yeah, I'm fully prepared for something like this to happen, and this to happen, maybe even this to happen. I'm even prepared for this to happen. And then, maybe something like that. Who knows? Maybe this piece never actually happens. I don't actually know for sure. All I do know is that I believe in the concept of Bitcoin. I think Bitcoin is going to go up over time. If you look, there's never been a 4-year period that somebody, if you've held Bitcoin for 4 years, you've made money every single time, guaranteed. So I'm kind of buying into that. I do think especially if the economy starts to weaken a little bit, people are going to print more money. Inflation is going to go up again. The dollar over time will continue to get less valuable. Bitcoin is even a more interesting kind of alternative to gold, because gold technically is more infinite than Bitcoin, right? Bitcoin can only have 21 million. Gold, what happens when we start mining asteroids? What happens when we start, doing other random stuff? What happens when we just mine more gold out of the ground, right? It's not capped. It's very scarce, and it's hard to get, and it's expensive to get. So I'm not saying if we start mining asteroids that the price of gold is going to collapse, because obviously it's going to be very expensive to do that. So it will keep its value, but Bitcoin is one of those things where it's you can't, there are no Bitcoin asteroids, to go mine. So no amount of money will mint any more Bitcoin that are going to be minted in mind. So that's just important to keep in mind. Let's see. Oh, it's just my face. Yeah, sorry. That's my bad. Here. This is what I was talking about. Let me draw again. But basically I was saying I'm prepared for something like this to happen. I'm prepared for something like this to happen, prepared for something like this. I'm even prepared for something like this to happen. And then my expectation is that we will see this, but maybe we don't, right? Hard to say for sure. There's no guarantees of anything in life. And then enter my monologue about gold and Bitcoin and all that type of stuff. So I won't rehash all of it for you, but this is essentially the chart that I was drawing to myself, I guess. So have I bought Ondo yet? Definitely not. The reason why I haven't bought Ondo yet is exactly what we're seeing here. I'm just not exactly sure. And actually, let me delete this stuff so I don't muddy up my chart too much. But the reason why I haven't bought Ondo yet is exactly, I can show you the exact candles. This is why I have not bought Ondo yet, right there. And the reason why, we went over this a little bit earlier, but I will redraw it just so we can show it. This is why, because we have a descending trend line. I'm just trying to make it probably more perfect than it needs to be, but we have a descending trend line that we still cannot break. We also had an ascending trend line right here. We were talking about this earlier as well. We had that as well, right? So we kind of had like a, what's that called? Like an unstoppable force versus an immovable object type of situation going on. But I was always skeptical that we would actually see that, like that we were actually going to break here, because we have kind of the historical precedent. We basically have a stronger historical precedent that we're in a downtrend than we're in an uptrend. Obviously, we've got the very large macro precedent that we're in an uptrend, but this is what essentially I was expecting could happen. Now, if we would have seen, let's get my trusty brush out, we would have seen, this candle kind of maybe do this, and then we would have seen it come back, retest, do this, do that, and then do that. I would have been buying Ondo probably for sure. I'm not going to say, guarantees, but like that to me is what I would have wanted to see to buy Ondo. What actually happened is exactly why I didn't. Now, keep in mind, I like Ondo. Ondo is a good project, but the thing that we need to realize here, we'll go back to CoinGecko. The thing that we need to realize here is that Ondo is a big token, and it has a lot of dilution to come. You can see here the circulating supply is only 3.1 billion, max supply is 10 billion. That means there's 7 billion coins, less than 7 billion, just barely, but there's 7 billion coins that need to be diluted onto the market. You can see exactly what happens. I will show you Helium because I'm still sad about it. If any of you guys watch me, I usually throw in a Helium rant at some various point. But you can see exactly right here. Helium went up to $53 a coin back in 2021, November 14th. This is basically like the top of the bull market, right? I mean, it is. It's a Pico top. Well, we can see, we've seen a couple resurgences out of Helium back to about $10, a couple different places, but nothing even close to what we saw back in 2021, right? However, if we look at the circulating supply, it's still not 100%, but it's much closer to 100%. Now let's go take a look at the market cap. The market cap was about $5 billion. Well, the market cap right here, where we saw its most recent high, was about $1.5 billion. That's about 30% the price of what we saw here, right? Well, but if you look at the price was less than 20% the price of what we saw here. And the reason why is because of dilution. There's more coins, which means more coins are essentially the same price is, or the same market cap is around to hold up the same amount of coins, which means price goes down. unless the demand keeps up with the increase of supply, price is going to go down. I mean, that's just kind of like basic market dynamics, right? And so Solana is actually probably an even more obvious version of this, because if we look at the max, we can see we hit tops back here in like, $260. We saw $260 here, right? Basically, the tops that we've seen here and here are the same price-wise as the tops we saw here. Okay, great. Let's go look at market cap. Not even close to the same, is it? We can see here market cap was about 70 billion. Market cap here was about 122 billion. And market cap here was over 125 billion. But the prices were the same. Now, again, I understand there's candles in here, but like this is just taking close prices and multiplying it by market cap. So that should not impact anything here. This is what dilution does to a market cap or to a coin's price, right? And so I'm fully expecting this will happen to Ondo, this will happen to Sui, this will happen to basically most of like the new VC coins that have come out. This is what's going to happen to all of them. So you have to be very, very careful in terms of making sure like you're not only are you buying the right project, but you're buying the right project at the right time. It's very, very important. Let's see. Also not listed on Binance. Yeah, I understand that, but like the dilution to me is the biggest piece here. If we go into multi-year bear market, it basically doesn't matter what price you buy it at, is probably going to be lower than that. It's just how it's going to be, because you're going to have the unlocks happening. The VCs, if you're buying it right now at 80 cents or whatever, the VCs I'm sure got in at 20, 30, 40 cents. They're already going to be up, especially if the market's going down. The second they unlock, they're going to dump more selling pressure. Price is going to go down. I mean, this happens all the time. If you don't trust me, go take a look at some of the VC coins from last cycle and let me know what you find. What's up, Kate? I know you're big on ICP, but do you see any potential negatives with the project? Anything with the tech or maybe something within their team? Yeah, of course. I mean, I see negatives in every project. I think it would be irresponsible to not see negatives in a project. If you don't see a negative in a project that you're looking to invest in, you probably haven't looked hard enough. There's no project in the world that I don't think has negatives. I mean, even like the gold standard Bitcoin, right? I mean, there are plenty of ways I think Bitcoin fails. Plenty. And I could list off probably 3 or 4 right now. The problem is you need to understand the risks with the rewards, right? So the risks that I see with ICP, marketing is atrocious. They're focused on tech first, which I think is generally probably, actually, let me move this off the screen. They're focused on like the tech first, which is generally, I think, a good thing. But what they don't understand is like attention matters in crypto. I hate that. I hate that attention means more than the actual value of a project. I think it's ridiculous. And I do think that will change. But the reality is that that's what matters right now, right? And so they need to understand that, and I think do a better job of marketing. I actually met one of the guys very high up in marketing at ICP. He actually was the CMO at Camino for a little while. He's the one that led Camino to over $1 billion market cap. Definitely like a pretty good resume. He gets that like very, very deeply. He understands that like that is very important. And so I think he's trying to kind of switch some of the attitude there at ICP. But up until this point, I mean, nobody really cares at all about marketing. Like I said, good thing and a bad thing. But I think one of the ways that it fails is bad marketing. I mean, I actually did a video, might have been about a month back at this point, where I basically made a whole video on exactly this, of like technically superior projects that have failed, and whether that's because of some ridiculous thing that like users just happen to like more. For example, if you look at like the Betamax versus the VHS is kind of like that is like the case study when it comes in terms of like better tech that lost. But when it comes to something like like that, yes, from a technical perspective, Betamax was better than VHS. But what people didn't realize with Betamax is since it was so much higher quality and it was smaller, it was just better. Like from a general, basically it was better in everything except one thing. And that one thing is what made the difference for basically everybody. And it was the fact that Betamax could only record 1 hour of video and VHS could record 2 hours of video. And that like was one of the, like, I'm not going to say it was the only, but it was like one of the key things that really swung that in favor of VHS over Betamax. So that's all to say, like, just because you have superior tech does not mean you're guaranteed to win. Now, of course, superior tech sure helps, but it does not mean you're guaranteed to win if nobody knows who you are. And so I do think that the ICP is understanding that and moving in the right direction, but I mean, who knows, right? Like, it could already be too late. I don't know. But that to me is like the biggest downside with ICP. Could get better, could get worse. Hard to say for sure. But I do think like the risk in my mind is outsized enough that I'm willing to take that bet. Could not work out. I mean, I'm prepared for that to happen, but I think that it's probably going to, because I think it's a good project. Obviously, I wouldn't invest in it if I didn't think it was going to work out. So I think it's obvious that I believe that it's going to work out, but that's not to say that I am not expecting or not prepared for an alternative outcome. Let's see. And are there any good cryptos that burn, and does the opposite of cryptos like Ondo? Yeah, okay. So you're basically wanting like deflationary mechanisms. Keep in mind that the things like Ondo, the VC coins is what I'm going to call them. This is incredibly common. They usually launch with about 80% of their coin locked up, 20% circulating. That usually does well for the price, usually does well for the investors, and they get a dump on retail all the way. Like, that's very, very common. I don't like it, but it just is what it is. So you guys should know that that is what it is. But that's important to understand. As far as cryptos that burn, there's a whole bunch of different cryptos that burn. Burning cryptos are like kind of like the thing, right? I mean, that's, everybody's trying to make their coin deflationary and like have people okay with it. I don't love deflationary coins like inherently, because deflationary mechanisms is not always great for your coin. That said, that I think there are some intelligent ways to do it. Ethereum, I think, is a good example. Ethereum has both a mint aspect and a burn aspect. So if market traffic is super, super, super heavy, you're going to be burning more Ethereum because people are paying more than what's actually being minted via like staking. ICP has a very similar system. They actually mint more ICP to the stakers, but the people actually using ICP have to essentially pay for it by paying for cycles. And you pay for cycles by you buying ICP. It's not totally like one-to-one. So if ICP goes to $1,000, like, cycles aren't going to become ridiculously and like prohibitively expensive. But that is a way of how you pay for cycles. ICP is the currency in which you do that. I also think it's great that they unhooked cycles from ICP, because if ICP does go to $1,000 per, well, now you've just killed your ecosystem, because now it's prohibitively expensive to use. Look at ETH. I mean, ETH hasn't been killed per se, right? But it really sucks using ETH, and people basically want to use anything else, because why would you spend $20 on a transaction? It just doesn't make any sense. So that's kind of what we're seeing. Those are kind of some different burn mechanisms. I mean, there's a ton of different, like, every time, like, sometimes people put taxes on their trades. So, whenever you buy or sell, you pay a 5% tax, maybe 2% of it goes to the team and the 3% gets burnt. Hard to say exactly for sure. There are some other coins that I'm aware of where, like, any of, like, these are usually coins that have revenue, but any of the revenue goes to buying back their coin 100% or maybe even 50% or whatever. And then maybe a certain percentage of that coin that's bought back is then burnt. And then some of it is maybe then reissued or reallocated or whatever. So lots of different options there. Those are kind of like some of the ones that will do those types of burn. And just because something inflates doesn't mean it also doesn't have that burn mechanism, right? I mean, think about XRP. XRP is still massively locked up as well. I think 40 to 50% of that is still locked up, but XRP does also have a burn mechanism. I mean, it's basically immaterial. I mean, it's definitely immaterial, and it's basically inconsequential, but they do technically have one. So, you can have both. They're not necessarily mutually exclusive. So anyway, that's That's kind of what I've got so far. I probably it's been about an hour 15, so I think I'm probably going to wrap it up. Hopefully you guys enjoyed these kind of more interactive videos, is what I'm calling them. Just because I'll give you something that I'm looking to talk about, kind of still have a message for the day like I usually do with my videos, but then give you guys time to answer some questions, have a conversation, be more interactive, a lot of that type of stuff. I'd love to hear what you guys think about it. Comments are obviously always appreciated. Liking, subscribing, all that type of good stuff. I'll show some of my stuff real quick. Again, I've got the exchanges. We went over Phemex earlier. I also have BTCC and WEEX. All those are in the description. If you are interested in joining my private Discord where we have some of these conversations, or you can ask questions, something like that, before I make videos, all that type of stuff, feel free. That link is also in the description below. All that type of good stuff. So anyway, yeah, thank you guys for tuning in, and we'll see you in the next one.